Good afternoon. Welcome to another virtual event hosted by the Bipartisan Policy Center. This is the first in our series on From Small Business Rescue to Entrepreneurial Recovery, examining the actions that have been taken by the federal government to provide relief to small businesses and what needs to happen now to spur and support a strong entrepreneurial recovery. We have a terrific lineup today. Before we get to our panelists, we're fortunate enough to have two contributions from members of Congress. First, we're going to turn to Congresswoman Sharice Davids for some brief remarks. Congresswoman Davids represents the 3rd District in Kansas. She's a member of the House Small Business Committee, pertinent to today's discussion. And in that role, she's chairwoman of the Subcommittee on Economic Growth, Tax, and Capital Access. So we'll listen to her remarks now.
Hi, everyone. I'm Rep. Sharice Davids. I'm proud to represent Kansas's 3rd Congressional District, and I'm also proud to serve on the House Small Business Committee. As we've all seen, this past year has been immensely difficult and devastating for our small businesses. On the Small Business Committee, we've been working to ensure that businesses have the support and resources needed, not just to get by, but to come out stronger on the other end of this crisis. That's why we fought to pass multiple major COVID relief bills that implemented things like the Paycheck Protection Program so that small businesses can pay their workers and keep their doors open. But it's no secret that these programs, especially at the beginning, were far from perfect. I have made oversight a priority in my office because we have got to make sure that relief funds are going to the businesses that need it the most, not just large, well-connected corporations. And sadly, we know that minority-owned businesses were often most impacted by the inequities in the relief funds. The recently passed American Rescue Plan will provide crucial support for the hardest hit businesses, especially minority-owned businesses that have often been left behind. With the increase in vaccinations and the decrease in COVID cases and hospitalizations, things are starting to move in the right direction. But it doesn't mean that this crisis is over. And we have got to continue to make the needs of our small businesses a priority during these tough times. In the 116th Congress, I introduced 2 bills to support military veteran and female entrepreneurs, both of which passed the House with broad bipartisan support. The SERVE Act would help veteran business owners succeed by examining the barriers that they're facing, including things like access to credit, increasing promotion of all these small business programs that are available to veterans is really going to help our entrepreneurs. My other bill, the Women's Business Improvement Center Act, would increase funding for women's business centers, which play a critical role in counseling and technical assistance to help businesses that are primarily owned by women. I'm looking forward to reintroducing these bills this Congress and hopefully getting them signed into law so that we can address these barriers to entry that women, minority, and veteran-owned businesses often face. We certainly have a lot of work ahead of us, but as we help Main Street recover from what has been a very devastating economic and public health crisis, I know that we're going to get through this thing by working together. So thank you all for inviting me to participate in your event today. And I'm looking forward to seeing you all in person when we get the chance to get back to that. Thank you so much.
Thank you, Congresswoman. It's always difficult to schedule time with members of Congress. So while we were not able to do something with Congresswoman Davids and Congresswoman Young Kim, our next guest, together, we did have an opportunity to sit down with Congresswoman Kim and talk to her about the challenges facing small business and what she's focusing on in her role on the House Small Business Committee. My colleague, Michele Nellenbach, who's our Vice President of Strategic Initiatives at BPC, spoke to Congresswoman Kim, and we're going to listen to what she said now.
Hello, and thank you for joining us today. My name is Michele Nellenbach. I am a Vice President here at the Bipartisan Policy Center, and so honored to be joined by our special guest this morning, Congresswoman Young Kim, who represents the 39th District of California, which includes parts of Los Angeles, Orange, and San Bernardino counties in the U.S. House. She's an immigrant, small business owner, community leader, and mother. She is the first Korean American woman ever to serve in Congress. She started her public service as Director of Community Relations and Asian Affairs for former Congressman Ed Royce, where she was a key liaison to the 39th District, an advisor on issues pertaining to Asian American community and foreign policy. Prior to serving in Congress, Young was the first ever Korean American Republican woman to serve in the California State Assembly. Congresswoman, thank you so much for joining us today.
Thank you very much for having me. Good to see you, Michele.
Thank you. So we are talking today specifically about small business and entrepreneurship. So you're serving as the small business on the Small Business Committee in the House, including as ranking member of the Innovation, Entrepreneurship, and Workforce Development Subcommittee. So let's start with your own background. Since you have experience in starting and running a business, how will that shape your approach to small business?
Thank you for the question. After college, I began my career in a private sector, first as financial analyst and controller at a local bank holding company. I was doing merger and acquisitions. Then I went on to start and operate a small business in a ladies' wear manufacturing company. And as a small business owner, I understand the struggles our small business owners face every day, as I personally experienced the challenges of dealing with taxes, regulations, struggling to meet payroll and other overheads. So naturally, I keep these in mind when I serve on the Small Business Committee, and I'm focused on working on pro-growth, pro-business policies that will allow small businesses to exercise as much innovation and creativity as possible. As a Korean American, especially Korean American women from a minority community, I'm also focused on helping our business owners of all backgrounds, especially minority, women, veterans, to gain access to the capital they need to build their businesses.
That's great. So I know, obviously with COVID, we've seen a lot of small businesses struggling and even going out of business. Talk to us about the impact you've seen in your district among your fellow small business owners and entrepreneurs.
Yes, sadly, the COVID-19 pandemic has left businesses unable to keep their doors open and families struggling to pay rent and put food on the table. But the strict lockdowns, especially in the state of California, where I'm from, have obviously had more dire effect on our small business owners. And I've traveled throughout my district and met with many of my friends who are small business owners in tears, closing down their businesses. And they contribute to over, 40,000 small businesses closing during COVID-19 in California, and half of these are permanent. These are also real people. As I said, they are my friends. I frequently meet with them and I go to their restaurants, and these are real people paying their employees and providing for their families, and we cannot forget that. Our state also saw a 293% increase in unemployment claims in just 2020, with more than 782,000 residents filing initial unemployment claims. And in our state, it's sad, but to make matters worse, the disastrous California policies like AB 5, which went into effect already, it's a law in California that redefined what an independent contractor is. And that kind of legislation have made it harder and in some cases impossible for workers who want to drive for Uber for their free time or perform in their local orchestra or work in a manner not approved by that law, effectively kills jobs and make them unemployed. And there is 1 in 5 people in Los Angeles who are unemployed. California has also granted more than $11 billion in fraudulent unemployment claims and has another $19 billion worth under investigation. I've sent a letter to Governor Newsom asking for attention to and answer to these type of fraudulent claims that has been filed.
Wow, yeah, that's a lot to cover. You're going to be quite busy this year on the committee. But so some small business owners have been hurt more than others, women and people of color in particular, prior to the pandemic. But these populations had the fastest growing rates of business creation. Tell us more about the importance to you of women entrepreneurs and why they're a priority?
I think because I'm an immigrant from South Korea, I put myself through college and I started my own business. And now serving as a member of Congress, I am committed to helping other Americans, other immigrants, other young women and girls to pursue their dreams just like I did. But I've seen minority women entrepreneurs struggling and juggling multiple tasks as a mother, wife, in addition to running a business. But I have to tell you, they're very good at multitasking. However, we've seen how women and minorities have a harder time accessing the capital they need to start and grow their businesses. So, as a ranking member on the Small Business Subcommittee on Innovation, Entrepreneurship, and Workforce Development, I'm committed to supporting our entrepreneurs, especially diverse minority women and veterans, and creating policies that allow our workers and businesses to succeed in today's evolving and economic landscape.
I will say, as a working mother myself, we are very adept at multitasking. So, in what ways can or should the government support minority women business owners? Are there areas where you think action could be helpful, and are there places where regulatory barriers might need to be removed?
Yes, as we talked about, oftentimes we are woman, but we are mother, working mother. In my case, I'm a mother of four. So I know very well that there are some hurdles when one becomes a mother. And often women business owners lack the resources or the network to know which resources to tap into to have a successful business. Currently, there are about 13 million women-owned businesses, accounting for 42% of all U.S. businesses. That's like half. I think that we must put greater emphasis on the SCORE programs, which can help minority women business owners tap into expert business mentor that could help them provide advice and navigate the system. And in my Southern California, there is a lot of ethnic group organizations such as Asian Business Association, NAUBO, National Association of Women-Owned Business Owners, and then there is Philippine American Chambers, Vietnamese American Chambers, Korean American Chambers. There is a lot of organizations that I would encourage, especially minority women-owned businesses like ours to get involved so that they can share resources and participate in the mentor-mentee programs. I think that would be very helpful.
Was there any one of those organizations that particularly helped you when you were getting your start as a small business owner?
Yes, I am a member of a couple of local Chamber of Commerce, especially one in North Orange County Chamber of Commerce that encompass several cities, and then La Habra Chamber of Commerce, where I belong and where I reside. But also, I am working very closely with, obviously, given my background, Korean American Chamber of Commerce in Orange County, Chamber of Commerce in Los Angeles, greater areas. That has really helped me personally.
Oh, great. Okay. So BBC, we're framing our effort on these issues as from small business rescue to entrepreneurship recovery. Over the past year, the federal government has provided billions of dollars in emergency support to small businesses. How do we now move from crisis relief to catalyzing growth among small and young companies? So we've got the COVID relief out. What do we need to do now to help these companies continue to grow and to start new ones?
That's a great question, and one that I will be focusing on. I think one way to ensure that we are incentivizing growth is by cutting red tape and regulations for small businesses. Many of these small and young companies need certainty in the marketplace, and they cannot thrive and survive if the rules of the game are constantly changing. And access to capital is another big component. So I've recently introduced HR 1490 with my colleagues Congress members Sherry Davids, Angie Craig, and Mr. Steve Chabot. This bill will modernize the SBA's 504 loan program, and this program provides capital for small companies that want to make long-term investments, like in missionary and real estate.
Oh, great. Okay. Well, that I'm sure the committee will be looking to take that up fairly shortly. So one notable development in the deployment of emergency relief in 2020 was the inclusion of financial tech companies in the SBA lending support programs. There's now several questions about the continued role of fintechs in those programs. How are you thinking about this issue?
I believe that fintech companies play a crucial role in the lending market and have done a good job reaching the underserved businesses. So according to a recent report provided by the SBA, 34% of fintech's PPP loans have gone to businesses in low to moderate income areas, and 70% of fintech PPP loans are for less than $150,000. So clearly, this shows that fintech companies should be a part of the solution. And innovation is always good for the marketplace because it brings access to consumers and bring prices down.
Great. So what are some of the other key issues you'll be watching for the Small Business Administration?
I'll be watching the rollout of the shuttle venue operator grant program that unfortunately has not been up and running as fast as many of my constituents would like to. So we need to examine the hiccup and provide the SBA with the tools and the resources that it needs to operate the program efficiently. And I hope the President Biden's administration does not take a path where it burdens small businesses with onerous regulations, especially at a time when they're just recovering from the pandemic. And we must recognize that Main Street is the lifeblood of our economy. And as small businesses go, so our broader economy goes.
Oh, that's a really good point, and I think an important one, that how much small businesses really do drive economic growth. So one high impact group of entrepreneurs in the United States is obviously immigrants. They've started many well-known companies, and the companies they start and run also contribute jobs and wealth to local communities everywhere. Based on your experience and what you've seen in your district, what are some actions you think would be important for supporting and attracting immigrant entrepreneurs?
As an immigrant myself, I want to make sure that all Americans have the opportunity to pursue their dreams, just like I did. And but what we saw was that a lot of the closures during COVID-19 in California disproportionately impacted minority business owners. So we need to find ways to bridge the gap between immigrant entrepreneurs and the access to capital and other resources to grow their businesses. And one way is to actively promote and leverage the SBA's entrepreneur development programs and offer management and technical assistance training. I think this can be done by participation at immigrant and ethnic community chambers and business organizations. And in other words, we need to bring the resources to them, not wait for them to find out what the resources are available at SBA or rely on third parties to provide those, very important management technical assistance trainings.
Great. No, I think it's really helpful to hear that there are so many ethnically focused chambers of commerce out there that can help immigrant entrepreneurs make those connections.
In my district in Orange County, we have very robust the ethnic chambers of commerce that I just mentioned to you. But when we hold a job fair or expos to bring businesses, we always invite SBA and other, important resources that are out there. But we have hard time just reaching out to them and getting the right people to come and join us. So I think it's really important that SBA, as I mentioned to you, they do extra effort to reach out to these ethnic community groups and work with them and provide the forums or the training events more on a proactive level.
Well, and now is with your role as ranking member of the subcommittee, you should be able to push them in that direction. So that'll be very helpful. So in a recent survey by the National Federation of Independent Businesses, finding quality labor was the top challenge cited by small businesses. Among those in active hiring mode, 90%, so they had few or no qualified applicants. Workforce and talent recruitment are persistent problems for small businesses. What role can Congress or the federal government play in addressing that?
It is so true. As I meet and talk with employers in my district and beyond, I heard the same challenges of finding workers with proper skill set to fill the available jobs they're offering, meaning there are jobs available, but they just cannot find the people with the right skills needed. So to that end, I would support investing in workforce training programs, apprenticeship opportunities, and paid work experiences for community college students. These are meaningful and impactful ways for students to receive high quality workforce experience while pursuing educational goals and be ready to enter the workforce through private sector opportunities. And I think we can also consider increasing the federal grants program at high school and community colleges that offer career technical education courses and build strong workforce pathways.
I think that's critical. BPC has been looking at the workforce training issues for years, and that divide between what employers need and the skills people have is not going away. And so investing in more technical college and community colleges, it really is the key.
Yes.
So thank you so much for joining us today. It was a pleasure to talk with you, and we're really excited to follow your work on the Small Business Committee.
Thank you so much for having me.
Oh, sure. Thank you. And thank you all for watching. I'll turn it over to the next panel.
Thanks, Michele. We're grateful to both Congresswoman Kim and Congresswoman Davids for taking the time to share those remarks and comments. Now we're going to get to the main event. We have about 37 minutes for an outstanding discussion. We want to save maybe the last 5 or 10 minutes for audience questions. First, I want to introduce a really excellent panel. Someone emailed me yesterday after they saw who we had participating in today's discussion. They said, "Oh, you've got some of my favorites today." So this promises to be an excellent discussion. I'll just go around in the order I see everyone on my screen. We have Louis Caditz-Peck. He's Director of Public Policy and Regulatory at Lending Club. We have Eric Rettig, Senior Manager in Policy and Regulatory Affairs at Intuit, and Claire Kramer-Mills, who's Assistant Vice President and Director of Community Development Analysis at the Federal Reserve Bank of New York. Before I get into my first question, I want to remind our audience, you can submit questions using the live feature in YouTube and Facebook, or you can do it on Twitter using the hashtag BPCLive. So for our panelists, we have a lot to talk about. I want to do some kind of stage setting, some landscape first before we get into the details. You all have a unique perspective and insight when it comes to small business and entrepreneurship. So I just want to go around and get your sense of what are you seeing today. Claire, I want to start with you, since the Fed system just put out the latest version of the Small Business Credit Survey. Give us your sense of what you're seeing in the landscape in small business in general, but also when it comes to issues of capital and finance.
Thanks, Dane, and it's a pleasure to be with you all today. I will begin with my disclaimer that the views I express are my own and do not necessarily represent those of the Federal Reserve Bank of New York or the Federal Reserve System. So with that, the survey that you referenced was taken in late 2020, And, as we closed out the year, I can say that, small businesses certainly, are still, hurling from, the pandemic and are seeing that their revenues have not been restored to pre-pandemic levels. We know that many shut down completely or at least temporarily, and so they're still reeling from that. Um, what we found in our survey was that there was a continued appetite late last year for additional stimulus from the government, additional aid, and strong majorities across the business community to apply for more federal aid. Those were stronger among firms owned and operated by persons of color. In terms of just the financial state of affairs, a majority of business owners told us that their financial condition of their firm was fair or poor. And, that went up to 79% among Asian-owned businesses, 77 among Black-owned businesses, 66% among Latinx-owned businesses. So, you can see reflected in that sentiment closing out the year, definitely uncertainty. Now, you're asking this question in March, and what we're seeing is a vaccine rollout, right? We're seeing at the federal level, hope is on the way, and we're seeing expansion at the state level of accessibility of vaccine. And I think we can't have this discussion, in a vacuum. It's certainly happening with the virus and containment of the virus at its core. So, I think that there is optimism as reflected in the latest, MetLife U.S. Chamber, business confidence. I think you're seeing some glimmers of hope. So, there's this mixed message of continued, uncertainty, but hope among the business community.
Thanks, Claire. I definitely encourage everyone to check out that Fed report. It's a great source of knowledge and information. Louis, I want to turn to you. Talk to us a bit about, give us a quick kind of thumbnail of Lending Club's, place in the small business finance ecosystem, and then give us your perspective on what you and Lending Club are kind of seeing out there.
Sure. Thanks, Dane. And I'll just comment how honored I am to follow Claire, whose research is just so important for our understanding of what's going on in small businesses worlds. So Lending Club is a fintech borrowing and checking, and also to pay high returns on saving and investing. The members are both consumers and small businesses. The small businesses that we serve tend to be smaller, the mom and pop size to Main Street size businesses that don't always get as much attention in traditional banking. And somewhat uniquely, Lending Club is attempting to offer some of the best qualities of fintech and banking and integrate some community development finance as well. So like a bank, what we're doing is offering the lowest cost financing products out there, SBA loans and PPP, plus the other services that small businesses need that fintechs often aren't able to provide, checking, cash management, that kind of stuff. And like a fintech, we're trying to do that in a way that's fast, easy, mobile-based, giving people the kind of experience that we all expect in the ways that we do things in this era of Amazon Prime and texting. And we're also trying to bring in some community development in with that. One of the ways that we serve small businesses is with a closely integrated program with the CDFI Axion Opportunity Fund, which is the largest CDFI small business lender. And our program there has reached about 5 times the representation of minority-owned businesses and 4 times the representation of women-owned businesses as compared to conventional bank lending. And I think we'll talk about PPP later. So as far as what we're seeing, as everyone's been saying, small businesses are devastated. We've been facing pressure, I think, for years of competition with larger companies like Amazon. And there's long been a challenge that Congresswoman Kim and others talked about of access to capital. And a story that people are starting to understand is that even pre-COVID, that access to capital experience has really been changing for small businesses, because now small businesses, they still often lack access to capital from traditional banking, but they are inundated with offers of capital from financing companies that sometimes offer higher rate financing, 50%, 400% APRs that are never disclosed to small businesses. And so small businesses today are stuck between several rocks and hard places right now.
Thanks, Lewis. Eric, same question to you. First give us a sense of Intuit's place in the world of small business finance, and then a sense of what you guys are seeing out there.
Yeah, happy to. And thank you to Dane and the Bipartisan Policy Center for putting this important discussion together. It's good to be with some, old acquaintances on the panel here. And thanks to Representatives Davids and Kim for their remarks and important work on small business and the small business ecosystem. So, as Dane mentioned, I'm Eric Rettig. I'm on the Policy and Regulatory Affairs team at Intuit. We're the makers of QuickBooks, TurboTax, and Mint. And a lot of my work focuses on our small business side of the house, so the QuickBooks side. And QuickBooks, just to give you the rundown, it's a global platform of really interconnected financial tools that help more than 7 million small businesses around the world simplify operations so they can really reach solvency and achieve that prosperity, right? Folks not as familiar with QuickBooks, may not know that we're not just an accounting software, like my mom used to use QuickBooks Desktop in her business. But we also have products. One of those is payroll, important to this discussion today. So 1 in 5 U.S. small businesses actually uses QuickBooks Payroll to pay about 15 million employees across the United States. We also have a small business lending marketplace, which was launched in 2013, and a direct lending product called QuickBooks Capital. And that launched soon after, as we found that at any point in time, really about 60% of our QuickBooks customers were looking for financing. And oftentimes, their needs weren't really being met, as Lewis mentioned, through traditional commercial lending institutions. So our customers tend to be an underserved population because they're newer or small, or they're newer and small, and the amounts they need to borrow are too small for traditional lenders to really take time with. So 3 core groups that we serve are young businesses. A lot of our folks in the QuickBooks Capital business have been in business under 2 years, rural, and then micro businesses, so the smallest of the small. And as far as what we've been seeing, we've been serving small businesses for over 35 years, and our customers have really never been tested like they were in 2020, right? So after a decade of growth, 2020 was really a year, as we all know, of unprecedented changes for small businesses of all types and sizes, like Claire mentioned. And the impact of COVID was felt by businesses everywhere across all industries. And its impact is clear. Throughout 2020, the health of U.S. small businesses rose and fell really in line with the pandemic as states, counties, cities, and towns put in place varying stringent or lenient operational guidelines. So it's been a tough year, but if there's one thing we know at Intuit is that small businesses are a gritty bunch, and as Claire mentioned, there's some optimism out there from the data we're collecting and seeing.
Thanks, Eric, and thanks for the inclusion of the Intuit data points. I want to pick up on that optimism. All 3 of you talked about just what we've all seen, which is the terrible economic hit that small and young companies have taken in the last year. Claire, you mentioned kind of this emerging optimism, especially with the vaccine rollout. What's your outlook over the next 6 or 12 months? In the latest Census Small Business Pulse survey in this phase 4 that they relaunched, the latest results I think go through mid-March, we saw a bit of improvement in terms of the outlook, but we still have 40% of small business owners in that survey saying they expect it to take at least another 6 months. September for resumption of normal operations. I'm just curious, what's your outlook for the next 6 or 12 months? Are you bullish, bearish, somewhere in between? Anyone can go first.
I'll start.
Claire, you want to go first?
Yeah, I'm happy to go first. I will say, I think that if you work in the space of small businesses, you have to be an optimist because they are, I think by definition, and they're resilient. And that's not to minimize the extreme toll that this pandemic has taken on the small business sector. But I do think that the latest research that's come out this quarter does indicate that there is optimism that's tied with the vaccine rollout. I think that said, and I know our conversation will turn to this. It doesn't look uniform across segments, and it doesn't look uniform across places. And so, I think as we look to in the next 6 months, it's not only that different businesses have different time horizons in terms of the bounce back. It's also that it really depends on what type of business you are and where you're located.
Eric?
Yeah, no, I was, going to echo essentially what Claire said. I like to remark about if you work in this space, you have to be an optimist. I think I am as well. Taking a look under the hood, and we've been doing some research with about a population of 2.7 million of our customers. What we're finding, and the data is telling us that, of course, overall, small businesses have, as Claire mentioned, shown to be incredibly resilient throughout 2020. But their recovery journeys have really taken, sort of two different paths on how much their business relies on public interaction, right? So COVID dramatically altered the industry landscape within 2020, while essential businesses over here have remained, resilient to the pandemic. COVID has really shifted a demand from, public-facing industries that depend on say people meeting in places where social distancing isn't or is more difficult, right? To non-public facing industries that benefit from stay-at-home activities, like I'm thinking home furnishings, sports equipment. I know I personally have been to Home Depot more than I've ever been in the last year. So the data is telling us that by April of 2020, year-over-year revenue change dropped to 77% to that of 2019 revenue. And April 2020, if you recall, was really the first month following travel and business restrictions as a result of COVID. And so from July to 2020 to November 2020, we're seeing revenues fall below the previous year. And then until about December 2020, when they're slightly ahead of the previous year. And of course, this varies across geographies and industries, as Claire mentioned.
Louis, how are you? What's your outlook here the next 6 to 12 months?
So, since Claire and Eric have been optimistic, I'll cover the other end of the spectrum, I guess, and just say I think there's been so much pain, and I think it's going to continue to shake out in some ways, particularly in the segments that Eric identified that are hurting the most. And to me, a big part of the question is what changes in consumer preferences stick as we return. What does normal look like? It's not going to look like 2019. And businesses are needing to retool and pivot and reconceptualize in some industries. And that's going to take capital. And I think creditworthiness is on weaker footing. And I think the support that the private sector is providing to small businesses without PPP and other kinds of support from the government is also weaker. So that's my fear.
Well, you've all already mentioned kind of the two big topics that I want to get into in this discussion. And one is, as Louis kind of alluded to, is just the role of the private sector, especially fintech companies, in supporting access to capital in some of those public programs as well. So let's talk about that. Before we get into fintechs and the role that they have played in public lending and SBA-backed lending, which we'll talk about, Louis and Eric, you guys are working for these technology companies, these fintech companies. You're kind of right at the cutting edge. Talk to us just about the evolution of fintech. We've seen enormous growth in the last 10 years, but that description doesn't do it justice. So just give us a sense of the fintech landscape and how you've seen it evolve. The last 5-10 years and the last year especially. Eric, you want to go first?
Sure. Yeah, it's a really good question, and I should disclose that I'm newer to the fintech world and was in small business advocacy in a previous life. But when I came to Intuit, I joined the company because we really believe that an accelerated shift to digital finances and digital financial services can really usher in, I think, a new era of democratization that can put knowledge confidence and tools really that enable smart money decisions into the hands of every person, not just the wealthy, right? So take a small business trying to access capital, for example. Capital can make all the difference for a small business. We all know that. And so getting financing through a traditional bank can be a long, really, and frustrating process that too often ends in a no, if it already hasn't resulted in a quick no. And so, I think many customer-focused fintechs like ours and, Lending Club, they really lower the barrier by using advanced machine learning techniques and really rich data sets to identify small business owners who are worth taking a chance on. In fact, in our direct lending product, QuickBooks Capital, about 60% of those folks would not have likely gotten a loan anywhere else. So if you look around the world, this isn't just in the US, right? This is global. Fintechs are already playing a major role in consumers and small businesses' lives. So I'm thinking of fintech adoption in markets like the EU, UK, China, Singapore, and in Africa. I listen to a lot of fintech podcasts, and just earlier this year, Stripe, the payments fintech, announced the acquisition of Nigeria's Paystack, as the population in Nigeria is going to double from like 200 million to 400 million by 2050. So I say that because all investments make it clear to me that innovation in the financial services space will just accelerate over time. And we've seen an accelerated shift, especially this past year because of COVID.
Louis, given the growth and innovation that Eric is describing, Lending Club has been at this for a while. After the last recession, the Great Recession, 2008, 2009, we saw conventional commercial lending to small businesses just really drop pretty steeply. And that contraction didn't really recover for several years. Fintech was still, the fintech as we know today was still pretty much in its infancy during that recession and its aftermath. How do you see this growth that Eric has talked about and that we know has been happening, this growth and innovation in fintech? How do you see that playing out, post this crisis, and how is it going to be different this time around?
Yeah, that's a great question, and I think fintech's going to take a larger role. Through the pandemic, as people have been dealing with social distancing and so on, as Eric described, people do everything now digitally that didn't expect to. My grandparents are Venmoing me, and you see that in the adoption rates of payment systems like PayPal and Square. That's way up, and so and also what fintech has promised too is, at its best, addresses the problems that have existed. In 2008, it was just so. What people say is that it was very, the banks felt like it wasn't sufficiently economically attractive to serve small businesses as opposed to large businesses. So they reinvested in, larger corporate lending, but small businesses are just too expensive to serve. So fintech has been lowering the cost of serving small businesses, and in some ways that's been successful. In reaching folks the way that Eric's described. In some ways, it hasn't been successful thus far. It's a market with a lot of differences within it, and a lot of the fintech lending and frankly non-bank small business lending generally has really delivered on speed and ease of access, but not on affordability, and sometimes not on transparency. And so, I think the best of what's going to happen over the next few years is going to be companies figuring out how to take the good things of what fintech can do and combine them with what works in the banking system. And my hope too is blend in what works from the community development sector, from CDFIs that have really some of the best experience and insight in how to reach this smallest businesses in low-income communities and communities of color and immigrant communities that are the most underserved.
Claire, I know you've spent a lot of time thinking about fintech and its role in 2020, its continuing role in the crisis, and what that means post-crisis. So, one of the most recent changes that we've seen in the fintech industry was the inclusion of fintech companies in SBA-backed lending, especially the Paycheck Protection Program, the PPP. talk to us about that change, why it was such a big deal, and then how you see that playing out post-crisis. Is that just a crisis measure, or what does it mean for after we come out of this?
So we've been tracking the evolution of fintech in the small business space really since the recovery from the financial crisis, and I think, as others have described, it is quite a varied space. And so, I'd be remiss if I did not say that there's a broad swath of players. But I think that the reality is that when you look at the credit needs of a typical small business, I'm talking the mom and pop shop. They need squarely under 250K. Those are the most, are even requesting under 100,000 for their credit needs and their credit applications. And when you think about that, it's not a super profitable space for your typical bank. And so there's this real dichotomy in the market right now. We survey small businesses. We ask them, who do you have your primary financial relationship with? And the lion's share of them, as reported in our last survey, will tell you that it's banks, whether large banks or community and regional banks. But at the same time, we know that the cash positions of typical small businesses are pretty tight. They don't have tons of reserves. When they need money, they need it quickly. And I think, as Louis described, fintech has been really good in speed of capital. It's also been really good at serving those smaller credit needs. And so that's just the reality of the space kind of going into this pandemic. And so when we looked at the rollout of PPP, and the relationships, kind of different relationships, the different segments of the small business, community have with traditional providers, with banks. Going in, anyone who had kind of been following the credit markets in small business knew that there were going to be, sizable shares. They anticipated there would be sizable shares, whether rural communities, underserved communities, businesses owned and operated by persons of color, we're going to have a harder time, and that fintechs and I should say MDIs and CDFIs also were critical players to kind of bring into the fold to really serve as tributaries for relief funds. So that was a big moment when it was in kind of the waning days of the first round, the first allocation, and then of course fortified with the later rounds.
Thanks, Claire. I want to. There's an audience question I want to sneak in here. That's a good segue to our next topic. But before we do that, Louis and Eric, continuing here on fintechs and PPP and the crisis. Is there anything you can share about Intuit and Lending Club's experience during 2020 with some of this new role that fintech played, Louis?
Sure. So Lending Club has recently merged with Radius Bank. So this is how we became both a fintech company and a bank. And in doing so, we've lent almost $1 billion in PPP. And this has been really to small businesses that weren't getting served by their primary banking relationships. The vast majority of these companies weren't customers previously. And as a result of reaching that segment, it was a lot of the more rural and underserved kinds of businesses that Claire described. I think our average loan size in PPP in round one, which is the data that I was looking at, is about half of the average size overall. It was about 100,000, whereas the round one average was, I think, 230 or something like that. And that average has continued to drop. So I think it's just another point of evidence that online delivery is, and the willingness to serve new customers is got to be part of the future. Another thing I really want to quickly mention and plug while we're talking fintech is another announcement that came out this morning that the American FinTech Council, which is a new association representing fintech broadly, and it has a new executive director, Gary Reeder, that was just announced that I think is going to bring a lot to this conversation. And that group is focused a lot on setting responsible standards in small business lending with the Small Business Bars Bill of Rights, and that will continue. And I also just want to quickly applaud Eric and Intuit's work, because it's really stood out for the same things of reaching smaller, less served small businesses. So I'm really glad to hear his voice too.
Thanks, Louis.
Yeah, no,
I want to ask you about the Small Business Borrower Bill of Rights when we get to the policy discussion. Eric, yeah, can you share about Intuit's experience?
sure. Yeah. First of all, just like taking a pause on, wow, what a massive effort PPP was. And, regardless your views on the program, we at Intuit applaud, the public servants that stood up this massive program and, all the staff on the Hill that had, thought through it and to really implement this thing quickly. I think back on the journey, and it was quite the journey, and we're still going through it. Um, and I really take away three lessons I think learned. First is PPP was really unique in that it allowed, as Louis mentioned, fintech companies to participate in SBA lending operations for one of the first times. One of the key lessons, I think, and Louis also touched on this, is that consumers and small businesses are relying more on non-traditional lending institutions for information and also, more importantly, capital. So there were 21 or so fintechs participating in PPP in the first round, and they facilitated over $4.7 billion worth of loans to small business borrowers. And as that market grows, I think customers will, have more choice, and this will be an important factor for the Small Business Administration as they think about their lending operations in a post-pandemic world. For Intuit's part, our average loan size was $33,000 for small businesses with employees, fewer than 10. And then for self-employed folks, the average loan size was $7,000. These are the barber shops, the mechanics, the Main Street coffee shops. So that's first. Second lesson was that given the opportunity to innovate, I think the SBA can really leverage fintech companies to better serve the country's small businesses. For example, by April 16th of last year, the SBA had facilitated 4 years worth of guaranteed loans in less than 14 days, worth $350 billion. That's a lot. Keep in mind, again, that the SBA's flagship 7A program was only recently digitized as well. So I say that because imagine what the SBA could do if they had sufficient funding to invest in technology and partnerships, which could really, increase startup rates and small business growth in the United States. And then the last one, I think this was touched on, the last takeaway is that PPP was a Band-Aid and there's more to be done. I think it worked well for many of the nation's small businesses. However, we see startup rates among solopreneurs and minority-owned, and PPP often didn't reach a lot of these communities. So there's definitely more work to be done there in order to really rebuild a thriving small business ecosystem.
Claire, I want to ask you about something you mentioned previously, but before we move to that topic, I didn't know. I want to give you a chance if you had anything else to say after listening to Louis and Eric about fintech and its role and how it evolves next.
Yeah, I think, look, there are real opportunities. We know that, small businesses, how did they plug, before PPP came along, how were, and even after PPP, how were they plugging any shortfalls that they were, needed to plug in order to keep the lights on? They were dipping into their own pockets. We know that 1 in 4 small businesses that we surveyed is concerned about their personal credit or depreciation of personal assets because they use them they've taken a hit in this pandemic. So there's repair to be done for sure. I think it'll be interesting to see kind of how the fintech space evolves and frankly how the broader financial system helps these businesses and these business owners get back on their feet, because of course it's not only their welfare, it's the welfare of their employees as well and their communities.
I want to sneak in an audience question here, and it pertains to something that you've each mentioned, which is the terribly uneven impact we've seen in the crisis across business owners and entrepreneurs, demographically, geographically, by type of business and sector, and by income characteristics, and all sorts of other dimensions. So, one of our questions is we've seen, we're all very familiar with this data on the disproportionate impact we've seen fall on business owners of color and women in particular. So the question to each of you is, how do we broaden financial inclusion? How do we build greater resilience in a more even way? What are the steps that your organizations are taking, and how can public policy more generally advance financial inclusion? I'll go in the order that I see you on the screen. So Louis, you're up first.
Okay, we could talk all day about this, and I'm thanks for raising it. So, gosh, at the level of policy, I'll just mention two things that are moving right now that can make a huge difference. One of them is enacting Dodd-Frank Section 1071, which would create really the first accurate data about how well women and minority-owned businesses are being served. And that is such a simple, light touch, market-based way to create innovation in lending to minority women-owned businesses. Because once we see kind of for the first time what models are actually effective at reaching women and minority-owned businesses, then that will create incentives for more investment and replication of those successful business models, and it'll put some pressure on the business models that aren't effective. Another thing that we can really do is respond to the ways that there are quality problems in the parts of the market that women and minority-owned businesses especially use. Women and minority-owned businesses are less served by banks and more served by non-banks. And so one tweak that I think we'll talk about hopefully later is in some ways the non-bank small business financing market and the market overall, it's kind of broken from a competition perspective because there's been a growth of small business financing that I think another Federal Reserve publication described as higher cost and less transparent credit options. That's from the Atlanta Federal Reserve's report on minority-owned small businesses, a growth of higher cost, less transparent credit options. And without transparency and costs, what we're seeing in the market is there's not actually price competition because there's not actually price disclosure. And so costs are really high and they may not be coming down. And so something simple without interfering in the market too much, so I think it could be a bipartisan solution, is creating a truth in lending framework so that there's price disclosure and price competition. And that's been done in a couple different states, California, New York, passed very, very bipartisan, near unanimous small business truth in lending laws. And Maryland has just been working on a bill introduced by a Republican in one house and a Democrat in the other house to create small business truth in lending. And that will address what the Federal Reserve research found, that minority-owned businesses are about twice as affected today by these higher cost, less transparent credit options. And a third thing I'll just mention is there's really a need for unsecured credit because some communities have less collateral available.
Claire, you're the next one I see on our screen. We just have a few minutes left. Claire, the New York Fed has done research on this. I know you think about this a lot. Talk to us about financial inclusion and what you think needs to come next.
Yeah, I would echo a lot of what Louis said. I do think that there is a great need, knowing the disparities. Again, we didn't enter the pandemic in an equal state, right? We knew that there were tremendous disparities in financial services relationships, in assets, which has an impact on a myriad of things, not least of which is what types of businesses get started and where. And so I think we need to be really thinking holistically about our financing ecosystem, including, the future of equity financing and equity options for, communities of color, which have not been well served traditionally. I would also say that, I think that there is an opportunity. There was a disruption. We've talked about the SBA programs. We talked about newly authorized institutions. And we also know that SBA programs, have done, tremendous work in outreach, in business assistance and mentorship. But I think there's more work to be done. If you look at the lending numbers, lending to women and minorities, I think that there's room for improvement. And, in authorizing new channels, again, new tributaries to new places and new demographics, I think there's a real opportunity, and it would be a shame to let that opportunity pass us by.
Eric, we have 70 seconds left for you to respond, talk about financial inclusion.
Yeah, no, I think one of the things I agree with what Louis and Claire just said. Lewis hit on a couple of the key policy pieces. I think another thing that we'd encourage the SBA to explore, and they are exploring as they figure out how to roll out these grant programs from the American Rescue Plan, is working with fintech to deploy some of these funds in the future, not just on the grant side, but in SBA lending. Again, if you take a lesson learned from PPP, we're reaching the smallest of the small folks with under 10 employees and the self-employed. And I'll also take kind of a different approach and zoom out a bit. I think one thing that's not talked a lot about in the fintech conversation is, how do we really digitize Main Street? How do we give these small businesses the tools to save time, to help their businesses scale so that they can focus on running their business? And what good, frankly, are these digital tools if you don't have access to broadband as well? Another key point to all this. So, access in rural communities and, inner city. I remember a business down in Georgia I was talking to. They were a high growth tech startup who were recruiting folks from Silicon Valley, but they, around the corner down the street, you couldn't access broadband. So I say that because those are two things that I think are very much woven into the equity piece of this conversation and the fintech and inclusion piece as well. So I think we're out of time.
Unfortunately, we're out of time. As Lewis said, we can talk about these things all day. We should talk about these things all day because they're key to people's lives and livelihoods and communities and our recovery. I want to thank Lewis, Claire, and Eric for your time. I want to thank Congresswoman Davids and Kim. And I want to thank our audience for tuning in. You can find more on our website, bipartisanpolicy.org. We'll have links to the work of our panelists that you've heard today. And thank you all for joining us.